AMD is up 84% in just 1 month, and Wall Street is no longer treating it like NVIDIA's backup plan. With AI plus networking and massive MI450 deployments coming later this year, investors are betting AMD could become a real AI infrastructure giant, but at nearly a $700 billion valuation. The market is already pricing imperfection, so can AMD actually challenge NVIDIA, or has the hype gone too far? Hi everyone, this is Stock Market Breakdown. If you want to go beyond just watching price moves and actually understand the logic behind the market, make sure to like and subscribe. Let's dive right in. AMD has gone through a complete strategic re-rating. The company is no longer just a traditional PC or server CPU vendor. Instead, AMD is building a fully integrated AI infrastructure stack including accelerators, server CPUs, networking hardware, software, and rack-scale systems. By integrating the entire technology stack together, AMD is evolving into NVIDIA's most direct and potentially most dangerous challenger in the data center AI market. This is what Wall Street calls a re-rating. In the past, investors value AMD like a cyclical hardware company. Now the market is valuing it like an AI infrastructure platform. And once a company can offer an entire rack-scale solution from chips to networking to complete systems, it starts building real ecosystem lock-in. AMD is no longer just following NVIDIA, it's trying to build its own AI compute empire. Driven by the AI boom and a broader semiconductor valuation expansion, AMD stock has surged more than 300% from its lows, and in just the past month alone, the stock has jumped roughly 84%. That rally tells us one thing very clearly. Global capital markets are now treating AMD as the primary alternative capable of absorbing part of the world's massive AI infrastructure spending outside of NVIDIA. An 84% move in a single month doesn't happen by accident. What you're seeing is almost a form of panic buying, because the market is realizing that NVIDIA alone simply cannot satisfy global AI demand, and the only company with the scale and technical capability to absorb part of that overflow demand is AMD. That's why AMD is benefiting from what I call the second-toe option premium. Before AMD reaches its next generation architecture, the MI350 is serving as the company's critical short-term bridge. While it may not represent a revolutionary architecture shift, the chip features up to 288 GB of HBM3 memory and supports low-precision formats like FP4 and FP6. Its goal is extremely clear: lower the cost of AI inference. AMD wants to reduce the cost per token and attract customers focused on efficiency and deployment economics. Once these large AI models are trained, the next phase becomes inference at massive scale. And this is where AMD is actually being very smart. Instead of competing directly with NVIDIA on pure raw performance, AMD is competing on cost efficiency, because if AMD can cut inference costs significantly, a huge number of companies that can afford NVIDIA-level spending will naturally move toward AMD. AMD's real business transformation may begin in the second half of 2026. That's when the company plans to launch the highly anticipated MI450 accelerator alongside its Helios rack-scale systems. This is a major shift. AMD is no longer trying to sell just individual chips like NVIDIA. It's moving toward selling fully integrated AI systems with higher bandwidth, massive memory capacity, and tightly connected infrastructure. The biggest profits in AI infrastructure are not coming from selling standalone chips. The real money comes from selling entire systems: CPU, networking, storage, accelerators, all bundled together into one massive AI rack solution. And once Helios launches, AMD officially enters the full-stack systems era. That transition could massively increase revenue per customer and become the biggest driver behind AMD's next phase of growth. But beyond hardware, software remains AMD's biggest challenge. NVIDIA's CUDA ecosystem still dominates the industry, and while ROCm 7 has made significant progress, in model support and developer tooling. Investors still need to stay realistic. The key question now is simple. Can ROCm 7 operate reliably at enterprise scale? Can companies deploy it smoothly without major friction? Because that will directly determine how quickly AMD's hardware can actually monetize. Hardware sets the floor, software sets the ceiling. If ROCm isn't stable enough, even the best hardware won't matter. Large enterprises care about reliability more than hype. And when you're deploying AI infrastructure at massive scale, even small compatibility issues can become major operational risks. That's why investors shouldn't just watch the hardware roadmap. They also need to pay close attention to ROCm adoption and developer sentiment. What's making investors even more bullish is that AMD's roadmap is already receiving support from some of the largest AI players in the world. OpenAI reportedly signed a 6 GW partnership agreement, with the first deployment phase expected to begin later this year, using MI450. Meta has also entered multi-year, multi-generation GPU deployment agreements with AMD, and Oracle is reportedly planning a public AI supercluster powered by 50,000 MI450 accelerators. These aren't theoretical partnerships anymore. These are real enterprise-scale commitments. To put this into perspective, 6 gigawatts is an insane amount of power. We're talking about infrastructure on the scale of entire cities. And when companies like OpenAI, Meta, and Oracle are willing to commit real capital and long-term contracts to AMD's roadmap, it tells you something very important. AMD has already passed some of the toughest technical evaluations in the AI industry. These are not hype-driven headlines anymore. These are future revenue pipelines. But all this optimism has also pushed AMD into extremely expensive territory. The company now carries a market cap of roughly $687 billion, a forward divided by around 60. And a PEG ratio near 1.26. That means the market has already priced in a large portion of the expected upside from 2026. And as expectations rise, AMD's margin for error becomes smaller and smaller. The company has very little room for delays, execution issues, or software instability. A 60 times forward earnings multiple tells you the market is already buying tomorrow's profits today. Wall Street has essentially priced in the best case scenario, which means AMD is no longer in the storytelling phase, it's now in the proving phase. If production slips, deployments get delayed, or ROCm runs into problems, this stock could become extremely volatile very quickly. Ultimately, AMD does not need to fully surpass NVIDIA in order to continue outperforming. The company simply needs to deliver results that exceed the expectations already built into the stock. As long as AMD secures its position as the world's #2 AI infrastructure platform and captures even part of hyperscaler AI spending, the long-term growth narrative can remain intact. AMD doesn't need to be #1 if it performs far better than the market expects from a so-called backup option. That's already a win. Big tech orders give it confidence, full-stack racks give it weapons, and high valuation brings the pressure with Meta and OpenAI behind it. Can MI450 deliver in the second half? Drop your take below, like and subscribe to Stock Market Breakdown.